Good afternoon. My name is Jason Wiseberg. I am the Executive Vice President in charge of sales here at Valueline. You are currently listening to and viewing our professional webinar focusing on our Pro Equity Research Center. A few housekeeping items before we begin today's presentation. We're scheduled these webinars to go just about 15 minutes. We kind of keep them short. We know your time is valuable and we appreciate you taking a few minutes to attend our presentation, so we'll be short and sweet. We will take questions at the end of the presentation. You can submit those via the Q&A or chat features on the WebEx platform. Of course, if you don't have any questions today or you just want to ask at a later time, I will show you at the conclusion of the webinar how to contact us for additional questions. So again, as I said, today we're going to focus on a service called the Pro Equity Research Center, and at the conclusion of the presentation, I will also speak about one company that our research department has pretty much handed me today to present as a hot opportunity, let's call it, that we feel is something worth taking a look at. So at the conclusion of the presentation, we will go over that. So let's kind of dive right into it. There's a fairly large audience I see on the webinar today. Just a quick background of Valueline, the company. We have been around for 80 years, actually celebrating, 85 years we've been around. We're celebrating our 85th year of business, and we have been doing this a long time, covering stocks, bonds, not bonds, convertible securities, my apologies, ETFs, mutual funds, and model portfolios. Present an array of different asset classes that we have research available to professional portfolio managers, financial advisors, CIOs, and so forth. So we've been doing it for quite a while. The backbone of our research is our ranking system. It's a 1 through 5 scale. A 1 and 2 represents a buying opportunity, a 5 a hold, a 3 a hold, and a 4 and a 5 a sell situation. I'm kind of going all over the place today, my apologies. So we are based in Midtown Manhattan. We have approximately 60 analysts that are covering 1,700 companies. Our complete universe covers 3,500 companies, so our quant model will rank 3,500 companies ranging from small to mid to large caps. We have a different level of service that we offer. If you take a quick look up on screen, these are 3 main services that Bloomberg Valueline offers. Geez, not one of my better presentations right now, but bear with me. Pro Basic, Pro Premium, and Pro Elite are the 3 services that we offer to our professional subscribers for our equity platforms. And again, the main differentiators for these different packages will be right here, that you see the number of securities and pretty much the number of years for historical reports that we cover. To dive into the Pro Equity Research Center, so if you take a look on your screen, I'm going to jump over to that product here. And in the Pro Equity Research Center, this is really our premium equity product. It's going to give you all the companies that we cover, plus an additional database in our Pro Elite. You're going to get about 6,000 companies. That breaks down to, as it says here, 1,700 pretty much large caps, 1,800 small and mid, and then we expand the database another 2,500 companies to give you some fundamental information on those. The nice things in this service is you're going to get the Valueline Select Portfolio, the Valueline Dividend Income and Growth, and the Valueline Special Situations Service. Those are 3 model portfolios in addition to 4 others that come standard in the any of the basic, the premium, or the elite services. So I kind of want to focus on that today, is these models. I'm going to jump in and show you a quick look at our digital and PDF research. What you're looking at now is the dashboard of the Valueline platform, and all these different modules are squares, rectangles, what you would like to call them, are movable, and you kind of set up the screen the way you want it. On this dashboard feature here is we're going to go to the quick links box, and this is what you're going to use for navigation. So if you click on, for example, this VLS current issue, we release about 120 different companies every Monday morning about 8 a.m. Eastern time. And if you come to this link here, it shows you the 120 or so companies that were released this week. Anytime you see a list such as this, you'll be able to sort the list on any of these different column headings. And by simply clicking on the column heading, it will change to blue, and it will show you what you're sorting it on. Timeliness is the bread and butter of our ranking system right here. You can see timeliness. That is a measure of the next 6 to 12 months performance on how we feel about a company. Again, 1 and a 2 represent a buying opportunity. A 3 would be a hold, and a 4 or 5 would be a sell scenario if you are currently long the position. So you can go into a screen such as this to find the most recent list of companies that have been released. If I click on a company such as Abbott Laboratories, just to show you what our research actually looks like, what you have in front of you on the screen now is the digital version of our platform. A couple of things just to point out. Of course, you have this rankings module right here. You also have a summary of it up here in the banner. Each one of these is a module, and if you see anything in the title bar, such as a button like that, you can bring modules to the forefront of the screen and really dive in and take a deep look. Any module that has data in it, as a professional subscriber, you have the ability to download this data, such as the data you see down here, right into Excel or a CSV format just by clicking that button, which is very valuable to those professionals who want to go on and manipulate the data further. Down, you'll see each one of these, again, is a module, as I pointed out in the beginning. You can drop and drag these wherever you'd like them. You can hide them to get rid of them altogether. You can change the positions. And after you do all that, you can come and save the changes and then ultimately have a list of different templates that you'd like to use, look at, for the modules that really mean the most to you. One thing I want to point out here is the Valuation Module. This is one of our most heavily utilized modules. You can see there's a lot of good information in here. For those of you who are new to Value Line or might not be that familiar with us, you'll notice in any of the either online or PDF research reports, there is data in what I like to call regular font, and we have data in bold font. Anytime you see data in bold font, it is our proprietary estimates and projections. So on the right-hand side in bold, you are looking at estimated data for 2016, 17, and then 3 to 5 years out for each of the categories that you see over here on the left. And pretty good because, not a lot of research companies will look out 3 to 5 years, which kind of brings me to the point that if you didn't already know, if you're going to choose to utilize Value Line's research, we are in this for the long haul, meaning that our views are basically for holding positions 6, 12, 18 months out, in a lot of cases 3 to 5 years out. So people use us if they have a long-term valued approach and they're not getting in and out of positions too frequently. So that's the digital version of a research report. For those of you who may recognize or remember, right here is where we keep the one-page PDFs. If I click on that and pull that up, hopefully, and let me just expand this a little bit. It looks familiar to you, so a lot of you. This is that one-pager that is still available. As a professional subscriber, you are allowed to take this and send it to a client as a nice validator or an idea generator, whatever you're using Value Line for. You can take this one-pager and send it off, and it has all the pretty much same information you'll see on the digital version. Again, you'll realize over here is the bold fonts or estimates and projections versus the as-reported data. And then if you scroll down a little bit, for that 1700 universe, which is primarily large caps, you will see on the report right here the commentary from the analyst. In this case, it's Michael Ratty. And that's one thing to recognize as a professional subscriber. You will also have access to our analysts. Your institutional specialist can put you in touch with any of the analysts that write our research and allow you to kind of dig a little deeper into that if you have questions. So in the Pro Equity Research Center, that first piece, as we kind of mentioned, is the Pro Elite package. The Pro Elite is going to give you all of the research reports on the 3,500 companies, expand that database by another 2,500 companies so you can get at some data, allow you to see 5 years of historical reports. And if I jump back to this screen and scroll down to the bottom of this, you see right here is the historical PDF section. This is where you can go in here and pull out 5 years of reports in this Pro Elite subscription. And you could also look at the selection and opinion and the summary and index going back 5 years as well. So that's a great thing to keep in mind. With the Pro Equity Research Center comes the Pro Elite, which gives you access to all this information. So next thing you want to look at here in the Pro Elite subscription, which is inside the Pro Equity Research Center, if I go back to my dashboard and pull up that weekly selection and opinion report that comes out every week, and again, let me blow this up a little bit. In every week, we will update you on our model portfolios. So I mentioned there's 3 portfolios that come in the Pro Equity Research Center, which I'll touch in a moment. But with every subscription, the basic, the premium, or the elite, we give you access to the core 4 model portfolios. And these are portfolios 1, 2, 3, and 4 designed for different types of investors. And if I scroll down, we can start to see that information. Portfolio 1, for example, is suitable for more aggressive investors. Each of these portfolios will have 20 positions in them at all times. And to qualify to be in a specific portfolio, at the bottom we give the criteria that our analysts use when they're modeling this. Keep in mind this is updated every week. We will tell you if we buy or sell anything. If I scroll down, you'll see the second model is suitable for conservative investors. You can probably recognize some of the names in here, ADP, Boeing, Johnson & Johnson, and so forth. So this is for more conservative. And if we just take a moment to focus on what you need to do in this portfolio, it says a stock must have a yield that is in the top half of the value line universe, a timeliness rank of at least a 3. Unranked stock may be selected occasionally. It does note a safety rank of 3 or better. And then it tells you if the stock's timeliness rank falls below a 3, that stock will be automatically removed. So you have full transparency into the portfolio. Portfolio number 3 is a 3 to 5 year horizon. So this focuses a lot on our 3 to 5 year price appreciation potential number that we put out there for companies. And again, 20 positions in this portfolio. And then finally, you have portfolio 4, which also has 20 positions and really focuses on current income. So we bring you 4 different portfolios in, again, all 3 of our services, Pro Basic, Pro Premium, and Pro Elite. But within the Pro Equity Research Center, you have the Pro Elite, hence you have access to these 4 portfolios. Now, we do keep performance on these portfolios, which is available upon request anytime you'd like to see them. They are updated on a monthly, quarterly, and yearly basis, and you can see the performance on those 4 portfolios. So step 1 of the Pro Equity Research Center was the Pro Elite. Step 2 is to look at these 3 portfolios. We'll start first with the Value Line Select portfolio. These 3 portfolios we're going to talk about, 1, 2, and 3, these are monthly updated portfolios. In comparison to the 4 we just looked at that are weekly, these 3 are updated on a monthly basis. They also take a much deeper dive into a specific company versus that one-page standard report we put out on that 13-week cycle. And that's something else to note I did not mention. Value Line is on a 13-week cycle for our companies. So that means the 1700 universe, as well as the 1800 universe, every 13 weeks a report is updated. So if we release three about that have been having issues with the audio. We are back in business. What I was speaking about was the 13-week cycle that our reports on in the Value Line universe. The report on Apple was released on this week on Monday. We will report 13 weeks from now. So to note that if there is something significant in that 13-week period, an acquisition, a major announcement of some sort, Value Line will put out a supplementary report on that company. The supplementary report is typically, let's call it a blurb or a short paragraph on what our analysts think about what is happening during that 13-week period. All right. Let's take a look at, again, quickly, these three portfolios. This first one is the Value Line Select. Into the platform under Find Ideas. Value Line models can all be found here, as well as tools such as our screener, which is very helpful. We're not going to go into that today, but we have great tools like alerts, watch lists, and screeners that all come with it. So take a look at the Value Line Select portfolio, and here is an idea of the companies that are in the portfolio right here. Our most current recommendation is M&T Bank. If I click on Download Report, you see here it's about 15 pages long. So take a deeper dive into the Select portfolio as opposed to that one-pager. And companies that are in the portfolios get a real deep dive, and we take a look at company history of the company, what's going on with the bank, any innovations the company's doing, growth, and so forth. And you can see, as I scrolled through this report, a really deep dive into this company. Hence, we call it Select, because once a month we pick a company and do this deep dive. We get financial statement numbers and so forth. Okay, and then as the time goes on, these companies comprise this portfolio. And the positions are right here, and we do keep performance on these companies that we purchase in the model. The next would be the dividend income and growth model right here. If we jump over to that, again, this is a monthly updated portfolio. Actually, two portfolios within one, let's say. Each month, also like the Select, we pick one company, we take a deep dive into it, but we look at it on the basis of income and growth scenario. So the latest one for November is Qualcomm. If we click on the report for Qualcomm, we'll see, as we go into this, we're going to see information about the company. But as I scroll down, you'll see here starts the two portfolios. One portfolio is the dividend income and growth fee stocks, and the second portfolio down here is alternative stocks. So tell you, each one of these portfolios, what is in it, what our recommendation is for it. But all of these companies comprise, let's say, Portfolio A and Portfolio B with the master dividend income and growth universe. And I scroll through, you'll see there's companies in the alternative stocks portfolio, and take a deep dive into this month's recommendation, which again is Qualcomm. We do keep end performance for this portfolio as well, and it is most suitable, obviously, for those people looking for income. And then the third portfolio, the Value Line Special Situations Service. This is more aggressive recommendations, emerging growth stocks, long-term capital gains potential. You jump back over here and look at the Special Situations portfolio right here. You'll see come into the most recent one, and if I make this a little larger as well, we talk about an economic view of the company, And then within this portfolio is also two portfolios. An aggressive stock portfolio you see up top here, and a conservative stock portfolio, which you see follows it on the bottom. And as you scroll down a little bit, you can see some of the companies in each of these portfolios. Again, this is designed, this is published monthly. This is designed for a little more aggressive managers looking for a little like off the beaten track kind of recommendations that we put out there. So this, I scroll down a little bit, take a look at the conservative portfolio, and you can see some names that in this one. So the investors seeking growth and or income within this special situation universe. And then if I scroll down, you see we start talking about portfolio updates within the special situations portfolio. We talk about rank changes, dividends, you know, anything you could think of on that needs to be addressed will be addressed in this update. So that is the overview of the Pro Equity Research Center. Again, this is a product, our premium, top-of-the-line equity platform that gives you everything that we offer in the equity space. And you're going to get the Pro Elite service, which covers all the companies that we have reports on, plus the expanded universe. And you will get these three portfolios in addition to the core 4 portfolios that are in here. So you're looking at 7 models that are included in the Pro Equity Research Center. Currently, we are running a special, $250 off the price of the Pro Equity Research Center. If you are interested, then you want to come to our website, valuelandpro.com. Simply click on Contact Us, and we can fill out a short form, which will put you in touch with a rep and get back to you with all the pricing information and the specials that we're running. So on that note, I want to finish off with our pick, our most recent stock pick that came to me this morning from our research department. We're going to talk about one company that we really think is favorable at the moment, and I'm going to pull it up on our screen as we talk about it. The company is Tesla, TSLA, the ticker. And as we load this company in here, I'll talk about a little bit what, and I'm signed here correctly. So the Valueland Research Department recommends that our professional subscribers, that's the audience we have today, take a look at Tesla. The California headquartered corporation, you know, should well know by now, is led by Elon Musk. It's at the forefront of developing and manufacturing fully electric vehicles. And give me a second here. Let me just refresh the screen so we can get this up here and then come back here. There we go. We should be able to pull that up now. Okay, here it comes, the digital report on Tesla. There we go. So currently it's ranked as a 1 that you can screen, which shows our best rating. Again, this is over the next 6 to 12 months. Safety is a 4, so it does pose, you know, so slight risk, but we're talking about a 1 for the next 6 to 12 months. So first off, it's worth mentioning that the Valueland Research Department has on several occasions been actually critical of Tesla stock. While the company designs cutting-edge, aesthetically pleasing vehicles, we just didn't think the valuation was reasonable, considering steep bottom-line losses that continued to mount for the company. So moving to today, we still think red ink will persist, and that the stock is not trading solely on near-term earnings expectations or fundamentals. We'll see that light at the end of the tunnel. So, for instance, in the September quarter, profit of 14 cents a share. Its second quarterly profit the company has achieved in its history. During sales of $2.3 billion, bested our estimate of $2.1. The decline was driven mostly by product launches and store efficiency. So let's look ahead. Club production, deliveries, Model X, the company's new sport utility vehicle have given Tesla confidence that will reach its target of 50,000 vehicle deliveries in the second half of 2016. Production appear poised to increase dramatically. Management's goal is to reach 500,000 vehicles per year by 2018 after the release of the Model 3, the company's first high-volume car. So, all told, we are now cautiously optimistic in regard to Tesla's business prospect. Shifting gears for a minute, Tesla is in the process of acquiring Solar City. This potential deal has its critics, and shares of Solar City are priced well below Tesla's offer, suggesting that the market is skeptical the merger will be approved. Either way, we think the major story is Tesla's automotive business. As for the stock itself, we continue to consider it a risky play, but one significant upside, hence the one ranking. As it carries our top rank, suggesting it will outperform the year-ahead market. And if looking further out, the high end of our projected 3 to 5 year target price range is almost $300. As of Tesla was trading about $185. Hold Tesla is certainly not for everyone. We think now is a good time for risk-tolerant investors can consider taking a position here at these levels in Tesla stock. That's our recommendation this month. Every month we have a webinar for professionals, and we not only do our presentation on a specific topic, but at the end of each webinar we present our one of our picks, top picks from our research department. So at this point, that concludes today's webinar. Just want to remind you, go to valuelinepro.com, look at the question/contact us link, and fill out this quick form, and institutional specialists can get a hold of you and let you know whatever information you need. If you have additional questions, we will get back to you. I see one or two questions are popping up on the chat feature. We will email those. Those are good questions on Tesla itself. So have a analyst get back to you with the answers to that questions. If you have any other questions at all, whether they are products or any of our companies that we cover, please reach out to us. So thank you very much for taking a few minutes today. My apologies for the audio difficulties, but hopefully you found some of this useful, and hopefully we'll win some of your business going forward. So that's the day, and thanks again for attending.